but
Thank you, Chairman. And thank you, Chairman Bernanke, for being here. You know, I read in quarterly reports, investor prospectus, and industry research that patience and moderate and meager expectations are necessary regarding growth and job creation. But with 9.2% unemployment nationwide, sitting at 10% in my district, and the U6 up over 16%, my constituents can no longer really afford modest expectations or tolerate those. Patience is a virtue they can no longer afford to have. To me, the whole thing we're doing here in Washington has to be about jobs, jobs, jobs. Tax reform, stripping away harmful mandates and overburdensome regulations, getting our spending down to sustainable levels, free trade agreements, the whole thing, all needs to be about economic growth and letting businesses create jobs. Now, I believe, and my beliefs are not a political statement, my beliefs are from being a businessman for 28 years, employing over 3,000 people, creating jobs, being the CPA for multiple businesses, that today the business community and the financial services sector are locked up in uncertainty. Our economy is drowning in an unprecedented sea of new reforms with each wave of new regulations and the regulations crashing down on their heads before the effects of the last wave can really be understood, evaluated, and properly implemented. You know, the battering that our job market has taken by these waves has not gone unnoticed by me, not by the and underemployed constituents in my district, and thankfully not by you either. You made some headlines about a month ago at a press conference when Jamie Dimon asked you about performing an examination of the cumulative effects of these new mandates, Dodd-Frank, Basel III, not to mention health care, on jobs and credit availability. As I recall, your response was that you can't pretend that anybody really has because it's just too complicated. Now, I learned a long time ago in my business career that anything I do and anything we do should be SMART. SMART is an acronym for specific, measurable, attainable, realistic, and timely. The measurable one is the one I have a problem with. It's been a month now. The banks are now looking at much higher capital standards. The small community banks are looking at a repeal of Regulation Q. Everyone is facing higher compliance costs. Has the Fed begun such an examination study yet? Can we expect to see it? Can we expect to see some measurability of what these regulations are?
Yes. Let me first say that I agree with a lot of what you said about free trade, smart regulation, fiscal stability. All those things would help, and I hope the Congress will pursue those directions, a good tax code and so on. It is very difficult to figure out all the interactions of a complex system, but I do want to be clear that the Fed does do cost-benefit analyses of every rule that we put out, and we publish those cost-benefit analyses. That's both by law and by our internal practice. And we are doing our very best to take the statute that Congress gave us and try to make it as unburdensome as possible and still achieve the objectives. We have a very difficult balancing act here. We don't want to hamstring the financial system because it is so critical to the economy, to growth. On the other hand, you know, it's only been a couple of years since we had this enormous financial crisis which threw us into this deep recession. So we do have to take necessary steps to make sure that doesn't happen again, and we're trying. I assure you that the Federal Reserve has always been very attentive to trying to make sure that the rules and regulations that we promulgate, consistent with the statute, are as cost-effective as possible. And we do, as I said, do cost-benefit analysis quantitatively on these rules.
It's interesting, though, you said that based on the statutes you've been handed, do you ever look at them and say these just aren't working and come back and say it's not working, here's the problems? Because again, we have so much uncertainty in the marketplace. We have to get some predictability here to get this job market created again.
We're working to get this done and clear as fast as possible. I think broadly speaking, the statute addresses the main areas where there were problems, and there's certain parts of it that we may want to revisit. There are others we might learn more about over time. So I'm not saying it's a perfect bill by any means. I'm not claiming that at all. But I also agree with you that we need to make our regulations as clear and as effective and as quickly done as possible, and we're aiming to do that.
I know some people have asked in previous questions, but do you put uncertainty as a concern? I mean, again, being a business owner in the past, uncertainty will cause a lockup. And we could talk about, you know, the government cutting costs and cutting jobs, but the private sector, small business owners, create almost 67% of our jobs. We have to give them the certainty so they can create jobs.
Well, you're not interested in my PhD thesis of 32 years ago, but it was entitled Uncertainty in an Investment. And it was about how uncertainty can reduce investment spending. And I believe that. But there are many kinds of uncertainty. There's certainly uncertainty about regulation and those sorts of things, but there's also uncertainty about whether this is a durable recovery. People don't know whether to invest or to hire because they don't know whether the recovery is going to continue. So I think part of what we can do, obviously we want to address the regulatory, trade, tax environment, absolutely fiscal environment. We also want to do whatever we can to make the economy grow faster and make people more confident. I think we'll see a dynamic going forward. If, in fact, the economy begins to pick up some, I think confidence will improve because people will have more certainty about the sense that this will be a durable recovery. I think that's a very important thing to be looking for.
Thank you. And
Thank you,
Mr.
Chairman.
Carney?